Well, hello everybody, this is Jason Wink and thank you for checking out this video blog. Today is Thursday, December 29, and it's just about an hour and a half before the market closed today. Just wanted to do a video update today as I will not be able to do one tomorrow, and so this will be officially the last blog or video blog of 2011. And interestingly, there's really not been any significant developments in the past few weeks. This is a chart I've shown multiple times. It's called the daily chart of the S&P 500. And I'd written some lines, and drawn some lines in here in the past. You can kind of see those lines right here. This is sort of the last 6 months or so of the year. We've been on a fairly clear downtrend. But then in the last 3 months, so since October, the low of the year was set, and since then, each successive time the market sold off, it stopped at a higher level and moved up. That being said, it still hasn't been able to break through the support and resistance line. That's this horizontal line that I've drawn in a few months ago. Now, the reason why I just want to do a quick update today is I think in the next week I'll have posted my year-end review and then some forecasts for 2012. And a lot of what will happen next year will more than likely be decided in the first 30 days of 2012. At least a good chunk of it anyway, because the market has had a really hard time getting above a level that I wrote, really a couple months ago, was key for the market to sort of get back into a rally mode. And this is the stock market specifically I'm talking about. So that number, which is highlighted here, is 1,270 or thereabouts. And unless the market is able to get above that point and sustain it, in other words, if it fails there, there's a good chance that it will break lower and then start off quite poorly next year. And that would be a very bad sign for investors. So at the end of the day, the way we're finishing 2011 is much the same way that it was halfway through the year, when a lot of this volatility started back in August and September, and then has continued up through this point. 2011 will go down in history as the most volatile year in the history of the S&P 500, and I believe likely the most volatile calendar year of the Dow Jones Industrial Average as well. I wrote an earlier blog post that talked about the number of days the markets went up or down more than 2%. And this year, we're at 14 days where there's been a change of more than 2%, some good, some bad, in this calendar year. And to give some perspective, that's more than the entire 20-year time period from 1950 to 1970. So over 2 decades, we didn't have as much volatility as we've had in just 252 trading days of this year. With all that volatility, the only wise thing to do is to be fairly conservative and to wait for this trend to change. And that won't happen until the market either decisively breaks out and stays above 1270, or if it fails and then breaks back down, perhaps as low as the lowest points in 2011, which would be a greater than 10% decline from right now. So until that happens, the same thing I've been saying for the last 3 months holds true today. And I'll write a lot more detail about what may happen next year. There's a lot of outside things that are influencing the market that have nothing to do with the trends. It has more to do with how Europe will handle some of their debt issues. The U.S. has rarely even talked about addressing our own debt issues, which in many ways are as significant, if not more, than what we're seeing in Europe. So I'll post a lot more information about that likely next week. I hope everybody had a wonderful Christmas and has a safe and happy New Year over this coming weekend. I'll be back in touch fairly soon with additional text and video updates here in a few days. So again, thanks a lot for checking out the blog. It's been a very rewarding experience for me to do this year. This is the first year I've been actively blogging and communicating via the internet, and have had really a lot of very positive feedback, but also some good critical feedback on the negative side. So if you ever have anything that you want to share, always feel free to reply via email or post a comment on the site, and I'll be happy to get back with you and try to use that feedback to make this better in 2012. Thanks again. Have a great day.